The last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's been acknowledged as the one digital commodity in the world by the administration. The banking regulators have given a green light to bank Bitcoin. The accountants have upgraded the accounting to fair value accounting. There's been a surge of Bitcoin treasury companies. There's like 100 public companies or more that are holding Bitcoin on their balance sheet, and every single week there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45–50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish.
Bitcoin is moving into a new phase that will not be characterized by gambling, but by widespread use, clear regulations, and rising demand from institutions. Michael Saylor, executive chairman of strategy and one of the most vocal supporters of Bitcoin, has changed his long-term price prediction. In a recent interview, he said that Bitcoin is expected to grow at an average rate of 30% per year for the next 20 years. This will bring its value closer to the goal he set in mid-2024, which is $13 million 0 cents per coin. However, he says he's even more sure of himself this time. He said that all the major planets had shifted into place, which meant that there would be a big change in both tone and attitude. A new forecast for Saylor is supported by a number of important regulatory and market changes. The US government now publicly recognizes Bitcoin as the only digital good in the world. Banking officials have given banks permission to hold it. Our accountants allowed fair value reporting for corporate holders, which lets businesses show Bitcoin gains in real time on their books. As a result, more than 100 publicly traded companies now hold Bitcoin as part of their cash flow plan. It seems like every week a new company joins the list. On the supply side, the post-hospital setting has made things very hard. Only $450 0 cents worth of new Bitcoin are released every day, which is worth about $50 million 0 cents at the moment. According to Saylor, this whole daily issue is already being used to buy things. By Bitcoin ETFs and business investors. Not only is Saylor becoming more angry, but so are other people. Bitcoin expert PlanB, who made the first stock-to-flow model, is also reiterating his belief that prices will rise. In his most recent video and tweets, he talks about important on-chain signs and market cycles that point to more gains. These points of view show a greater agreement. The next step in making Bitcoin money has already started. Before we watch the clips, make sure you sign up for alerts and like this video to make sure you don't miss any of our deep dive crypto updates. What do you think about Saylor's new forecast? Let us know in the comments below. Thanks, and have fun with the movie.
You know, what's exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other preferreds were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basically offering a perpetual US dollar yield forever. We're getting the capital forever. And so by matching a very long duration instrument on the liability side with a long duration asset, we're creating, in essence, an indestructible balance sheet. And these preferreds are a very scalable, extremely low risk way to generate leverage to drive a very large premium into the MSTR stock. So it's a win for the fixed income investors because they're getting a yield 400 basis points more than typical preferred stocks or junk bonds would yield. And it's a big win for our equity investors because they want more Bitcoin, and this is a way to get leverage without worrying about any kind of bond coming due. My my forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid 60, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable forecasting 30% a year ARR on average for the next 20 years. I think Bitcoin's up 57% a year for the past 4.5 years. Again, that's double the Mag 7. That's quadruple the S&P. That's 8 times real estate, and bonds are down 4%. So Bitcoin is smashing everything, Joe. Crypto Twitter is very colorful, and we have these fun back and forths. The highest standard of in this case transparency would be a public company audit from a company like KPMG, where they're auditing both your assets and your liabilities, combined with officer representations pursuant to Sarbanes-Oxley about related parties and the like. And so we are a publicly traded company. Our assets are audited. Our Bitcoin reserves are audited by KPMG, as are our liabilities. I think that, we're always thinking and considering, is there a way to do proof of reserves in a secure way? We're not enthusiastic about publishing all of our wallet addresses and having people track them every minute by minute, because it exposes our custodians, our counterparties, and our employees to more IT risk. But we're considering it. We're thinking about, is there a way to do it with a zero knowledge proof? And we're also always thinking about self-custody and what is the right way to manage custodian risk. And I think what you see is there's the OG crypto advocates who developed a bunch of very strong ideas over the past decade, and there's an emerging class of institutional Bitcoin holders like BlackRock, like the ETFs, and like the Bitcoin treasury companies, and they're focused not just on the assets but also on the liabilities. We have to audit and publish those audits with 10Qs and 10Ks.
I think this is the chart that everybody's waiting for. The current market is still in a bull market. In fact, it's very much in a bull market. And I admit it's a very different bull market than other bull markets in 2017 or 2020, because it's more flat, it's longer, and a lot of people misinterpreted this chart. So first of all, it has nothing to do with stock to flow, right? Stock to flow is just scarcity, stock to flow ratio, and this stepwise model. This Bitcoin market cycles model is based on on-chain analysis. So I calculate and analyze all the on-chain transactions, and then based on that, a formula decides which state of the market we are in. So it's certainly not a prediction. I don't know if next month the dot will be red or yellow, but it's a detection. I can only look at the state of the market right now. So right now it's a bull market. And also don't be fooled by the length of this bull market. It's not that bull markets are always 1 year. Historically, they are 1 year, maybe a little less, little more. But there's nothing that says a bull market can't last for 2 years. So, in fact, if we're looking at the data underlying the model, we're right now at the very beginning of a bull market. So we made sort of a fake loop in bull market territory after the January 2024 ETF introductions, and we're now right back at where all the bull markets in the past have started. So it's a very bullish signal, if you ask me. If we look at a technical analysis indicator, very well-known one, the relative strength index, the RSI. For people who don't know, that's an index between 0 and 100. And for normal assets like stocks, the normal range would be between 30 and 70. So if the RSI is 70, then a stock is overbought and probably to reverse to go down again to normal levels. If the RSI of a stock would be 30, that's a sign it's oversold. So maybe a good time to buy. If we look at Bitcoin, that's completely different. The ranges are different, right? So the average RSI is 65. And oh yeah, everything above 50, RSI above 50 is an upward trend. So 65 really shows that strong upward trend in Bitcoin. And also the ranges, it ranges between, well, let's say 90, 95 and 40, 45. So right now we're at almost 70, 69, and Bitcoin has been ranging between lately last year between 75 and 60. So oscillating around the average of 65. And what I expect, maybe I'm wrong, but a lot of traditional finance guys have entered the market, and if they see an RSI of over 70, which we saw here and here, they get spooked. They think it's overbought and they sell. So it's very well possible that we stay in a tight range, a tighter range, a more normal range for the RSI in the future, because more traditional finance guys have arrived. But it's also possible, and in fact that's, I think, more likely, that we'll see after a period of bull market of overbought, there will be a couple of years oversold, a bear market, overbought, oversold. So we're now entering a bull market. So in fact, this RSI chart is saying we're entering a bull market, and I expect a couple of months with an RSI higher than 80 plus. And that means RSI 80 plus means a return, a market return, a monthly return of 40% and higher. And just to, as an example of what that means, from the current level, price level 104,000, if we have 4 months of 40% gain, that brings us to $400,000 Bitcoin. So very bullish, in my opinion. And
PlanB's most recent tweet brings to light a strong connection that many investors are paying close attention to. Bitcoin's price of about $100,000 0 cents is exactly the same as the S&P's price of about $6,000 0 cents, and the S&P's price of $7,000 0 cents plus 17% would be the same as BTC's price of $300,000 0 cents. This direct comparison shows how Bitcoin is moving more and more like traditional markets, especially stock markets, but with the possibility for huge gains due to its unique dynamics of scarcity and adoption. Looking into his new more study of, there are a number of on-chain measures and market indicators in PlanB that support this bullish case. He says that Bitcoin's realized price, which is the average cost of all coins held, has been slowly going up and is now around $47,000 0 cents. Coins moved in the last 2 years have been worth an average of $81,000 0 cents. And coins moved in the last 5 months have been worth an average of $96,000 0 cents. Importantly, Bitcoin's market price of about $16,000 0 cents right now is well above these actual price levels, which is a sign of a strong, healthy bull market. He also talks about the difference between the arithmetic and geometric moving averages, which is a technical sign that has only happened in bull markets in the past. This difference shows that momentum is strongly behind Bitcoin and will probably last for several months, if not a whole year. Even though prices are still less than the potential stock-to-flow model value of $500 million, 0 cents per coin, PlanB tells us that we are only 1 year into a 4-year cycle, so there is still time to appreciate. PlanB warns that all models have flaws and that buyers should think about their own finances and risk tolerance before investing, even with these positive signs. Still, his conclusion is clear. Bitcoin's value is still too low compared to how scarce it is, and it is just the beginning of a boom market. Prices that are aimed for between $250,000, 0 cents, and $1 million, 0 cents this cycle. Together, these ideas from PlanB and Michael Saylor's strong belief in the long term paint an interesting picture of Bitcoin's possible path. Traditional financial markets and Bitcoin are now working together, and institutions are starting to use Bitcoin. This sets the stage for a strong bull run in the coming months and years. Please click the like button and subscribe if you thought this study was useful. More in-depth looks at the Bitcoin and crypto markets. Leave your thoughts in the box below. Tell me, are you as optimistic as Saylor and PlanB? Let's talk and stay ahead of the curve together. Make sure you have notifications turned on so you never miss a new story about the future of digital goods. Thanks for watching.